Volume and volatility continued to decline in cryptocurrency markets on Tuesday. The CoinDesk Market Index, CMI, a broad-based market index that measures the performance of a basket of cryptocurrencies, was relatively flat, falling 1.64%. ETH's trading volume was also below average, falling below its 20-day average in 8 of the last 10 days. Crypto markets continue to operate in an environment of sideways trading, low volume and decreasing volatility. While prices have been flat, growth in leverage has not, as the futures estimated leverage ratio, ELR, for both has been on the rise. Both BTC and ETH are likely to continue trading flat, absent a catalyst that would shift sentiment. Before we continue, if you enjoyed watching the video, please share your thoughts by clicking the like button and writing them in the comments section below. If you subscribe to the channel and turn on the notification bell, you will be among the first people to find out when new videos are published on the channel. So let's just get started. On October 18th, Bitcoin outflow from exchanges increased, indicating that sell pressure is easing and helping the BTC price avoid a more profound decline below $18,000. During the European session, BTC trade was choppy in a narrow range of $19,400 to $19,950, so Bitcoin price prediction is neutral until this range is breached. 121k BTC, equal to around $2.4 billion at current rates, has been removed from exchanges over the past 30 days. The Bitcoin hash rate has set another all-time high, as reported by Sentiment. Analysis from the Sentiment data aggregator indicates that Bitcoin's long-term indicators have been showing signals of a reversal in BTC price. The 50-day moving average for the BTC/USD pair has also been broken, indicating a bullish trend. On a bearish breakout below $19,440, the triple bottom support could lead the BTC price toward the $18,900 level. Staked ETH withdrawal and lower gas fees are some of the developments expected with the next critical improvements for the Ethereum network, the Shanghai upgrade. This is the first major update since Ethereum's consensus switched to proof of stake, POS, in September after the mainnet and beacon chains merged. Moreover, the coming upgrade introduces an elemental change to Ethereum Virtual Machine, EVM, the technology that powers the network smart contracts. EIP 3540 separates code and data, making that process more efficient. Another expected proposal is EIP 4895, which will allow staked ETH and earned rewards withdrawals via the beacon chain. Among the proposals under consideration, the upgrade will also introduce changes to Layer 2 protocols, reducing gas prices by equalizing block sizes and increasing call data efficiency in the network. Members of the European Union must be ready to block crypto mining, the European Commission, the bloc's executive arm responsible for introducing new legislation, said Tuesday as the region prepares for an uncertain winter. The EU is also developing an energy efficiency label for blockchains as the disruption of gas supplies from Russia leaves some fearing high energy prices, blackouts and shortages. The energy consumption of crypto has increased 900% over 5 years, reaching around 0.4% of worldwide electricity use, the Commission said, promising another report on the topic by 2025 that could recommend further measures to cut crypto's energy use. Europe represents 10% of global proof-of-work mining, it added. Before its launch yesterday, newcomer blockchain Aptos was touted as the safest, most scalable Layer 1 blockchain. Prior to launch, for example, the tokenomics behind the blockchain's native Aptos (APT) token were essentially non-existent to the public. However, crypto Twitter remains largely unconvinced by the hefty token allocation, 49%, given to developers and private investors, giving rise to quips that Aptos is a blockchain catering to venture capital. The chaotic launch of crypto's newest Layer 1 blockchain has, for these reasons and more, stirred up tons of chatter in the community. So, without further ado, here are some of the strongest reactions to yesterday's launch over on Crypto Twitter. Crypto Twitter reacts to Aptos launch 3 days before launch. Crypto investor Miles Deutscher highlighted the obvious: Aptos is a major repository of venture capital. The Mango Markets exploiter has defended his actions as legal, but a lawyer suggests they could still face consequences. Michael Barcina, partner at Australian law firm Piper Alderman, told Cointelegraph, price manipulation is a cousin of misrepresentation, and in many jurisdictions, engaging in deceptive conduct is unlawful. Part of the $67 million worth of crypto returned to the platform will now be used to reimburse affected users under a reimbursement plan approved earlier this week. Barcina said there might be limited commercial incentive to sue Eisenberg, as any legal claims would be reduced by the amount a member received due to the proposal. Latin American crypto exchange Lemon has integrated with Travel, a tokenized travel products marketplace, to allow its users buy airline tickets, the company announced Tuesday. Travel went live in late September offering tickets for low-cost Argentine airline Flybondi that are converted into non-fungible tokens called NF tickets after purchase. Beginning this month, each Lemon user will be allowed to purchase up to 2 tickets on Travel with USDC from their Lemon wallet and receive 50% cash back in Bitcoin, with a 100 USDC limit per transaction, the company said. Prior to this tie-up, users of Travel were only allowed to buy NF tickets via Binance Pay. Anime-inspired non-fungible token, NFT, Project Azuki has released a physical-backed token, PBT, an open-source token standard that ties a physical item to a digital token on the Ethereum blockchain. Azuki shared on its Twitter account that the first implementation of the PBT will use the Bean chip, a physical cryptographic chip that self-generates an asymmetric key pair. The combination of the PBT and the Bean chip introduces a feature, which the project is calling Scan to Own. Azuki believes that PBTs will unlock the use of physical goods to create digital experiences, thereby creating a new generation of storytelling and experiences. Azuki's announcement of the PBT was received with mixed reactions on crypto Twitter. Since the news of Azuki's launch of a physical-backed token, the project has become number 1 on OpenSea's 24-hour trading volume rankings. Bored Ape Yacht Club and Yuga Labs co-founders Wiley Arono and Greg Solano on the GM podcast. Since announcing Otherside, which has been described as everything from a metaverse to an morph, Yuga's founders have been busy building out its development team. They're sprinting toward the launch of their Web3-centric metaverse, which, if early access footage is any indication, is reminiscent of World of Warcraft. Otherside isn't being designed for kids or no-coiners, either. Arono and Solano see their game as a semi-decentralized, but absolutely Web3 native, Roblox. We want to tell an amazing story, Solano said of their game's creative core. Despite all the controversy and backlash surrounding NFTs in video games, the founders think the haters will eventually come around.